Okay, Sunday, January 29, 2017. Going to run through futures here with the stock charts first, and then move over to the toss. But first off, the driver in all of this going forward here is the U.S. dollar. Excise taxes, tariffs, what have you, that can be offset with a stronger dollar, and we're in a period of tightening. Okay, so the dollar, because our paper pays more than other paper, you get a rise in the dollar. Okay, the dollar's beginning to crack in different currencies. Mexican peso, some of the Nordic currencies, things of that nature, the pound. But going forward here, everything is with the dollar. This is a weekly chart. Okay, pivot's coming up here, 99.26, I guess it says here for weekly pivot. Basically, we have a breakout, and I'll lean that this is a retest. Okay, but on a daily basis, what I think we have going on is what we had prior here, where if you look over the spring and summer months here, we had a period where it popped on through, broke on through, traded in sideways. Okay, so it's sort of made a head and shoulders type pattern before it broke out of the ascending triangle and continued higher here. Okay, basically what I would like to see happen here is that the dollar actually comes through the bottom here. POTUS is definitely pushing the envelope here, and we're going to start getting some backlash. I had a little thought today about where our little skirmishes would play out, and the Kazakhstan, that part of the world, would be an area where the road to Dushanbe kind of thing, where some skirmishes could play out. That's here nor there, but I was just thinking about if we were, to play those sort of games, where should the skirmishes be? The playing field here, or in this case, the battlefield. But cracking through on the dollar here, we begin to take out 100 here. So immediately we'll be able to export some of our goods, set some contracts going forward that way. Do we have trade deals that we want to, negate, things of that nature? But the deal is if the dollar continues higher, which it should, because that's what we're doing right now, then any type of financial engineering here should be offset with a stronger dollar. If the dollar goes up, 10%, that definitely takes out any type of added excise fees. Like I want to point out once before too, that playing the gold in that from like 1985 to 1987, it did have we had a period where gold went higher, but oil went lower. So if oil continues lower here, then it's on the same path, right? Stronger dollar, will be exporting more oil and less U.S. domestic production. So just want to start off with the dollar here. I'll treat this right now as like a head and shoulders, kind of like a little phase here where we get a couple of months probably of a sideways pattern here. Okay, anything dollar comes down here, that would mean folks would be running back into debt, and I would say that they are probably scrambling out of equities. It's just one big game of mumbly peg here for the inevitable recession. So every day that goes by, we get closer and closer and closer. All right, so on the dollar here, the USDX, the blue line here, is reset. So if the dollar should crack through here, it'll definitely pick up. But for right now, basically, I'm just going to treat it as a sideways pattern here in my ideal world. As mentioned before in previous videos, lower interest rates would be nice to sell homes in the quarter 1 and 2, and then we can continue to press the downside in debt in Q3 and Q4. But GDP came in soft, so we may start there for this week, that the world famous profit taking in equities. So all right, running through with forex or with the futures here. All right, basically I've sorted them by volume. There'll be some older expired contracts in here too. I just keep them around just to eyeball how things worked out with expiration and rollover and things of that nature. Okay, so here's what we have going on. Talked about the retest of the breakout in Friday's newsletter. 2277 would be about it. That kind of thing. That also lines up with pivot here. That is at 76, and then the next one is 52 and 2216. Any you know, here's the little SAR dots. I think I placed in moving averages, because moving average actually showed up for silver and gold could possibly get a bounce here too. Okay. All right. So basically what it kind of looks like for me here is that we poked on through for breakout, and then we had kind of a cross undecision day, and then we kind of rolled over. So I think we'll probably open up Sunday towards this area here. What did we close? 89. So this would be 12 lower, or what's that? 96, 100 points lower. Like I said, my biggest concern is not as much as correcting the last decade, but correcting the last century. We have 10,000 people a day going on Social Security, and we're only creating 8,000 or 3,000 jobs a day or less. So we're definitely going to run into an acceleration here of transfer payments. And if you're not funding that, say with tax cuts, you're going to have to sell paper. And of course, debt is actually increasing with the interest rates. So it'll entice people. You get to a point where you begin to think about parking your money in paper versus having a capital loss in equities. Commodities, basically in a secular bear market, Mother Nature will help out with some runs, like in eggs, if we get a drought. But for right now, overall, I'm leaning that going forward that the dollar will cause some issues for 2017 for commodities. All right, so equities here, probably going to be a retest here. If we begin to cut this in a little bit deeper, then I'd have to look at this as a failure. And like I've said in the past, I don't think this low will hold. I'm talking we're going to go, we'll probably 1850 and then 1600 would be areas for me. Most bear markets, you're going to have to, stay short anywhere from 9 to 18 months. They want to try and get a recession over with. So for the re-election, if he decides to do that, it's not in his nature to see things to the end. He gets a pretty good deal on the front end, and then it all falls apart. So we shall see going forward, huh? It's kind of nice when Washington stays quiet, even though that's the whole driver in all of this here. Whatever comes out of Washington, we're trying to work. We're working on full employment where we're trying to get the rest of the bodies back out there to work. Now, here's a crazy thought I came up with. They're telling everybody to go and do STEM, science, technology, whatever, E&M, mathematics, and that, go get a STEM degree, but then building a wall. How many architects do you need to build a wall? That kind of thing. It's going to be just, it's going to be pathetic, actually, but whatever. We get this out of our system. It's kind of like markets. You have to go through the dark period before you get a turn. Prices just keep going lower and lower and lower. I started fanning the flames on the old Bitcoin here. I was kind of shocked to find out there's like 18 billion plus out there in market cap on the Bitcoin. There is always some sort of fad. We had the Beanie Babies going into the 90s, and it whips people into, like right now, I talked about IPOs and that some months back. If we try to whip the herd into a frenzy to buy the stuff that we've been holding on for, equity-wise for a while. So, but like I said, right now I'm looking at this as going to be a retest on the minis. Remember, the VIX is, we're at critical lows again here too, but I'm sure everybody's been beat up enough with TVIX and all the other derivatives out there, UVXY and that and fun stuff, that they'll probably just blow this thing off here. The other deal too is if we go back the other way, the angle of ascent should increase sharply. And the next levels up here is 2312 and 2336. Now remember, 1% move as we go higher, it's going to be wider range. So we may have days where things begin to widen from like a 30 range to a 45-point range to a 60-point range might become normal as we go higher. Like I said, I'm looking for this thing to double between now and the peak of the real estate market in the United States, which should be about 2023, 24, somewhere in there. All right, so that's my story here. We have a good breakout here. This is the post-election low, and then the move higher. Okay. And it's kind of like, you know, when you're at the end of the move, sometimes it doesn't make sense and whatever. It's not that I'm you know, outright bearish. I just kind of took a stance in this area pre-Brexit that I didn't like what was going on. We basically had a running correction on that here. Looking at the pink dots again real quick. Okay. Pink dots, summation index, basically the blood and the oxygen, the number of issues participating in the rally, decent amount of issues rally. Going to new highs here on the New York Stock Exchange Composite, kind of faltered. Here's my running correction. Market did pull off post-Brexit, but we didn't get a trend change here. We have a gap, looks like it filled it here. I was debating if this was going to be an exhaustion gap or a breakaway gap, since I am looking for the market to double over the next 8 years or so, 7 years. NASDAQ didn't fill it, but the other deal here too is that the NASDAQ is rolling higher and there's not enough blood and oxygen going along with the story here. So if you look previously, here's 2014. This is where the VIX was at the last time that we're currently at. And so you can see that all of a sudden things were beginning to falter with new highs. And then we used China as a sell-off. And the first rate hike is up in here, and then the bottom in January and February. And then we're at a 1-year anniversary of the lows, so this may be the beginning of the highs. You know, that you go from one extreme to another extreme, and go from there. Basically, you're just watching, you know, trailing, you know, stop. That's what you're looking for. You know, like here, you ran your stops up, and then you had this pattern where it swiped lower, took out the stops, swiped higher, and that was the end of it. Okay. Got like a head and shoulders pattern here. So this could be a exhaustion gap. All right. So retest, has to hold, doesn't hold, 1800, 1600, that kind of thing. Crude oil, still treating it as a bear flag here, bear flag, overhead resistance. A weaker dollar might give it a little push, but each market's on its own. You know, we all know that the commitment of traders was kind of hefty on here, that it was slanted, but the mark slanted, you know, frothy on the long side, but yet we didn't get any rollover yet. So hopefully this week we'll get oil to come through. S1 says 51.11 and then 49 down here. I think I was looking for 45-ish or so, a little bit further down here. So I'll just treat this as like the end of a longer move, you know, from 28 basically doubled, and then we go try and find some sort of happy place, plus or minus around 40 I can live with. You know, do I think oil's going to go back down to the teens? Hey, it worked prior to this taking off, so you never know. Anything can happen, right? Depression, whatever, everything gets sold in a depression. All right. Okay, that's a pretty good reversal day there. Pokes higher than reverses. All right, so crude oil, still leaning on the short side. Here's Brent, same type of deal. Okay, Brent, same type of deal. I'm going to treat this as a bear flag for right now. It did poke up on what we talked about, I think, on Thursday. Did come up there, and then Friday reverse, so maybe we're going to get a running start here. Moving average down here says 51.51, which is also with the pivot 51.46 here. I think I was looking for 49 or something. Daily chart's a little bit different than the 2 days, huh? Same type of deal. What do I have for commitment of traders? Does it show Brent? What am I looking for? It shows here CL. Just look at crude oil real quick. All right, 3 years, barchart.com. It's a freebie. I just punch in with my Facebook thing. You can tell the green large specs are, we're at an extreme again here. What's down here? Managed monies, it's poking, they're all trying to push this thing here. So a huge unwind there, just like in possibly Natty Gas, right? Let me take a look at Natty while we're at it here. They're up there. Managed money is long. All right, so we'll see about Natty on here. We got gasoline. I have to look at the products a little bit different. They're long and they're long too. So gasoline, wow, 50-cent drop in gasoline or more, 80 cents. Wow. Okay, things might be getting a little interesting in the gasoline department here. All right, so gasoline, swap guys, producers are short here. And then heating oil. Heating oil, same thing. A little bit on the long side here. So heating oil, which is also used as diesel. Okay, well, they're short, heavy short producers. Very short here. The specs. Commercials are short. Okay, so it looks like oil's going to come off. Yeah, wow. Okay, yeah, oil's definitely going to come off. So that would work for Kevy. Yeah. Teens, you betcha. Why not, huh? All right, going back to the charts. The oil, same thing, bear flag, stays short. There should be some seasonals in there to like April. May come down and then into the driving season, that kind of thing. We shall see. Here's gold. I put on the moving averages. To me, it's just a lazy way of drawing trend lines in here. Also have Bollinger Bands. What else? 20, 40 on here. 40, 40, 40. Yeah, 40 on here too. When I started, it was a 40 period. And now the kids all do 50. Whatever. There is a little deal here that I like to watch every once in a while if I have moving averages is buy in between the band of the 50 and the 40. Most people are going to be sitting here, but if you have a little bit of a push, gold, commitment of traders, gold. There we go, gold, commitment of traders. What do we have here? Things are beginning to narrow. So that would probably talk about being in a sideways pattern. I did talk about that this could be an A, B, and a C wave, and then trade higher on it. Gold did go up between 85 and 87, but that also coincided with the 1987 real estate peak, the 18-year cycle. All right, gold is kind of narrow on here. Silver had a better push on Friday than gold did. Like I said, I'd be interested in silver when it's back under $8 an ounce and just start hoarding bars again for the next cycle. Buy a bar every week for a decade or two. Just hoard it up. All right. Same thing, silver just like gold. There's a larger sideways pattern here. While we're at it, copper. Okay, copper, little pennant triangle type deal going on here. Working on it, so, sideways you can draw your channel. Body's got short in a hurry here. Money managers are hoping that it pokes on through here. Comes back through 260 here. That'll probably negate it and probably slide through the bottom here. They may try and poke it through here. What did I say? Like 74, 78, 80. $2, the $2.80, $2.80 type of thing. I'll poke it up and see if there's, the run was pretty hard. Decent sideways action on here. All right, yeah, copper. Like I wrote last week, a little defensive on like FCX and things of that nature. All right. So for right now, though, gold, we'll just assume that gold's working on some sort of a bounce here. That may help out. With the dollar. If the dollar rolls underneath, and that should help out gold. The correlation is quite strong on those. Let's see, I can do this real quick. Go on to MRCI. It's another freebie here. Go down to free research. Then it has intermarket correlations, and you can change it from 30-day, 60-day, 90-day, 180-day, and then you can go and look for, what am I looking for here? Looking for the dollar index. Okay, dollar against treasuries minus 91%. So basically, treasuries drop, dollar goes up. Here's one at 100%, and that's with the euro. Okay, so obviously. All right, Swiss franc, same type of deal, and down here, cocoa. That was interesting. I think at one time I talked about hogs and cocoa actually having a strong correlation. That's some of my tongue-in-cheek humor here. So dollar and gold. Where am I at? Come on, you gold. Here we go. Come across 82% here, right? Right. Dollar and gold. Is that 67? Where am I at? That's platinum. 82. That's right, because this is the dollar. Gold minus 82, so 80%. Correlation, 70% for platinum, silver 58, copper 87. So as copper goes higher, or dollar goes higher, copper comes along with. Coffee's not working right, but that would though work. Because coffee is South American, but commodities priced in dollars. It's also traded in London, I believe, too, coffee. So in pounds, pound is stronger. That would harm the coffee. Okay, so getting back on track. Okay, so that's gold here. So we have a gold 50 period moving average. These are daily charts. Gold for February. So that's coming off the board here. Natty gas. Okay, so Natty, this is on the front end of March. This is the front month now. Basically, all we've done for Natty is come back to this meaty area here. Okay, so it's sitting on pivot. What am I looking at here for pivots? 333 and 5. 333 and 5. And then down here, 313 and then 290 for March. On the upper end, you have the gap fill area here. This was previous pivot area for January. Okay, so this is February's data from after January's trade. I'm going to assume that, the headwinds, first off, is a gap where the front ends are trading a little bit lower. I think it's coming to pivot. It's kind of has that look to it. If we open up lower, I'm going to assume that we're going to come back down to 290. And then I'll release that video to the public if you guys are short. Moving average, you can see it poked through a couple of times here, but moving averages basically tells me that the direction is up. So I'm looking for places to buy. What do we have? Not much more going on here. Just this whole gap or area. We're back to where the gaps were before. Remember, on the way up, we had to, try and get through it, up to 340. So they're willing to come in right now. What we'd want to do is we want to try and suck some of the people out of there. We're going to try and buy, whatever. The bulls, assuming that 90 gas, the low is in the March. We're trying to find areas to buy deferred contracts, October, November, December of 2017. We're trying to get into 2018. March of 2018, that kind of thing. We want to, because we want to cut out the risk. For those of you who have deep pockets, well, then that's a different story. They can just come marching in and start accumulating. Okay, so this would be another round of accumulation. All right, gold, we already know about that. Moving average here. Basically, I'll give it a, you know, say a swing higher off of here, you know, but we may end up with gold just trading in a sideways area here because of the dollar's the same way. It's just kind of sitting there. And Brent here for March, same type of deal. Brent again. Talked about Brent. Where we have June. June looks a little bit, yeah, looks like it's going to come down here. What's that, 52 for June? Corn. All right, corn bounced off the 200 moving average here. Okay, sideways action going on here. Like I said, you know, if the dollar turns higher, grains and everything should have a washout in here. Okay. But if you look at like weeklies and stuff, it does look good, but, you know, I suppose just look at the 200-day, you know, I have been kind of defensive on this stuff. We'll give another week here. February is usually seasonally when we see a low. Farmers sell all their stuff so they can buy more seed, et cetera, et cetera, et cetera. I don't know what the POTUS is going to do there. But then that comes down to Mother Nature, right? POTUS gives everybody seed. You know, here's $500,000. Go plant something. You know, Mother Nature comes through and just ruins it. So, best of intentions, right? So that one's an old. Oh no, that's a new contract, right? 17 Feb. That's off the board. Okay. May does look like a reversal bar here on a weekly, or this is a daily, yeah. 52, it's at May, yeah. So maybe, you know, press May down to 52, that's what, $3, so that's $3,000. I'll give that a shot. Swing through the upper end here is, you know, this pivot, that should be, you know, overhead resistance. Lots of volume up in here, so now we're trading below it. So the folks that are in here are now, you know, feeling the pressure. So you may get, you know, forced liquidation on here for whatever reason, right? X amount of bodies can't come to America. We're gonna just zap the airlines here. Plus also hotels should drop, blah, blah, blah. But Kev, these people are leeches. Yeah. They all have to buy beer and cable TV and all that other fun stuff. They pay taxes. Everybody pays taxes, right? Crude oil again, Brent, heating oil. Yeah, looks weak here. Heating oil, so where are we at? We're in late January, huh? So here's April. Like I said, the deferred contracts, you know, you get to October and stuff, you know, they're filling the gap area. So that was it, fill in the gap, ABC pattern, then come lower. Then you're looking to get long on this stuff. Okay, what we're trying to do is, you know, if everybody's like, oh, the winter's over with, you think they're going to be focusing on, you know, September, you know, in May, you know, that kind of thing. You know, you definitely want to start putting some numbers down, you know, putting some orders down here, just in case it's a hard swipe and it comes back up. Then it'll take off flying because we know we've already cleaned them out. We're trying to clean out some of the bodies here. Some of the bodies that are in here, you know, this was their opportunity with this gap, that this is time to get out of it. And we had a couple of shots to get out of this thing. But like I said, for right now, I'm just treating it as a larger sideways pattern. We still have March and April to deal with here. Anything can happen. All right. So, you know, like I said, the moving average is pointing up, so the trend is higher, right? You know, we're just working on a pattern here. It's like a diamond pattern, I guess. That's usually a topping pattern. But if April does break down, it's going to come back into this happy area. You know, like I said, anything under 3 for the contracts, you know, deferred as far possible. You know, it's just a reference point. You know, you cough up the 30 grand for the contract or something, so you have the round number. You know, it's just a reference point. You know, silver, nice move off of the moving averages here. And maybe a flag out to up in here, 1820. It's a moving average. You know, these are, like I said, it's easier to trade these days because all the computers have all this stuff plugged in here. You're going to tell me that the algos didn't know about this moving average or the Bollinger Band the SAR, or, you know, how it's, you know, that kind of pivot areas, blah, 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 yada, 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 whatever. You know, I mean, what, natty gas bounced off 308, which was monthly pivot. You know, bam. You know, that's why I put all this cruddy-duddy on here, because I want to see what everybody else is looking at. You know, right now it's pointing down. Silver's been pointing down for 6-7 years, and this is you know, maybe some sort of decent bounce up into here and then short it kind of thing. You know, the spin's going to be inflation. You know. Gasoline. All right, here's a little, probably will end up being a pause pattern here. See how, you know, oil broke out and then waited. Well, this kind of, you know, lower low, lower 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 low, but we might get a test of, say, 160 on gasoline, and then just to see if it, you know, if it, you know, the breakout, if the whole, you know, to a move to say $1.80, but it's, you know, this type of thing is, I'll treat it as a retest. You know, here is where it broke out at retest and continued higher. Now we're making, you know, multiple series daily of lower lows and lower highs. So you have to kind of, you know, if it comes up to here, it begins to swipe some stops, you know, that kind of thing. And then it's back above the breakout area again. You can see lots of bodies here with this volume, price, volume by price kind of thing. Right in here. Okay, so maybe gasoline gets a little bounce here, type of deal. All right, but like I said, I'm leaning on energy here on the short side. Here's beans. Okay, so beans are coming off of, they had a hard run here. I was looking for, to watch November 2017 beans, and I'm looking for them to go, you know, back under whatever 980 or something, back under here, and I blabbed as low as like 650. I try to get some attention here to see how people would react to this here. The bodies are in beans with we'll see that in the other charts, but you know, the bodies are in here. For beans, so it's susceptible, like natty gas and oil in that, for a washout. Commitment of traders on beans, right? We look at that. What am I looking for? Is this beans? Swiss franc. That's what I thought it was. Currencies. What's that? Price? Mid caps. Symbols are different here. All right, right. Beaners. There's your wheat, your meal. There's your beaners. Commitment of traders. All right, so that was a long, so a little short there. A little short on there, to manage funds, so susceptible to a drop. That's what I'm looking for. When you start, you know, you start looking at the longer picture here, you know, here's where we're at. If they're only looking at this much a chart, well, obviously it's like, oh, here's the low, $9. You know, $8 and $9 and $10 used to be the highs before. You know, here's 2004. Here's a previous, this is 96. This is the last drought before we got into the secular bull phase. So here you have a happy place back here under $8. You know, there are more people on the planet. You know, do I assume that beans are going to go under $5? Talked about it last week. I don't know, but anything, the depression, blah, blah, blah. We saw hogs get to, in 1998, a low not seen, you know, quarter, you know, you can get a whole pig for $60. That price is not seen since the Great Depression. And this is in $1998, not 1933. So, I mean, that's definitely slaughtered the hog market. So, you know, if these guys are only looking at this much chart in beans, you know, where am I at here? Free commodity charts, back to more research. Nearby commodity charts. Soybeans and grains. And hey, what do you know? Beans. So, you know, like I said before, I came across a book by Edward Dewey. he was given $500,000 in the 1940s to find out if depressions are cyclical, and he said yes. And he also found out how long empires last for, and the USA is long in the tooth. Just ask the British how that worked out for him, being long in the tooth. All right, so we have waves in the ocean every couple of years, and that's El Nino and La Nina. So here you have, you know, beans and beans and beans and beans every 4 years or so. In 1988, that's where I came across the books and all of that right out of high school. I went, wow, look at this. I need to go and get a second job and save my money for the beans thing. Of course, in 92, it didn't come through. By 96, we definitely had Mother Nature in a drought. And then when the money, there's we'll say a finite amount of money out there that chases stuff, right? If the little minions are paid the same amount every day, every week, every month, every year, whatever, for their salary, the only way you can really increase the economy is with credit and more bodies working. That's the driver of the whole thing, consumption in America. So here, the money, 1998, 99 odds, it ran into the stock market. Nobody wanted beans. Guess what? The NASDAQ blows up. We're sitting here going, well, you know, what are we going to buy? Well, the secular cycle there is commodities. And we ran the commodities. And it also was the tail end of the last move of the real estate market that peaked in December of 2005. And then we had the stock market rollover. But during that time period, beans, you know, we had a low dollar. The dollar, you know, was it 2012? The dollar was at 74. We had a high. Everything's relative, right? Interest rates go up, bond prices go down, vice versa. Same, dollar goes down, beans go up. Now we're going to have a stronger dollar. So you have your beans up in here, which used to be the peaks. Well, beans come sliding down here. Now I'd be interested for waiting for Mother Nature to do this game again. All right. So what I'm pointing out is that if you're only looking at the last decade, you best be looking at the last 40 years. You know, for the beaners, the beans. So if this begins to crack, you know, you can start talking, you know, and you start working towards $8. You know, these are previous highs that, you know, took a lot of work. I guess if I take soybeans and divide that by the dollar, let's take a look at that, Kev. Let's see here. Soybeans divided by the US dollar, right? Okay, so what do we have? Daily chart, soybeans divided by the dollar. So what do we have? We have a sideways pattern. Tried to poke its head up, it's not working. So if the dollar gets stronger and beans roll over, oh, look at you though. Grr. You're at pivot. I need to save this chart. Download. Yeah, I'll save this here too. Weekly and monthly. So ticket relationship. Ooh. Sideways, we have a topping pattern. Came down and came up, bounced off of it. Now we broke below it. Could have a hard reversal here. All right, so this is the price of soybeans, spot price of soybeans divided by the value of the dollar basket. Okay, so we're at $1, so this is close enough, you know. So if the dollar goes up to say 105 and beans come down, a little higher angle of ascent. Dollar goes down, and beans go down, maybe this thing stays flat, right? So, but the dollar goes down and beans go up, you're gonna have movement that way, right? Yeah, so beans come down and dollar goes up, and you're gonna come back the other way. In theory, right? I had one, it's long beans, short the dollar. That's basically how this chart's played out. I don't like this one too. Need to save it. And let's see how far back you go. Quarterly. 81, peak. Here was our strong dollar under Clinton, and just buried the thing here. Buried the beans in relationship to the dollar. Basically, here you go. Buy, you know, you're down here, buy beans, sell the dollar, and it worked out. 9/11 came through and just We dropped rates to like 90-year lows. All right, back on track. So the beans on this, to play the short side is how I'm looking at it. I'm trying to look. I did go back to Minnesota. The rivers were quite high, so maybe I may be I'm waiting for like 08 or 2018 for the drought, but maybe it'll come this year. I'm not sure. They have had rain and stuff when they're supposed to be having snow, so that tells me. And plus, also they did mention that 2016 was the warmest on record, so. I may, comes back through the other way. We may be on a different path, like say beans going into the 20s kind of thing. If we saw wheat go to $25 when people got caught, or $2 a pound for cotton, we may have something going on here. So, but for right now, we're just going to play it as the chart is, not speculating on, the sun and everything is. We're all going to be turn into dust. But supply here on June, right here, lots of it, prices below it. So these folks are going to be going, ouch, probably. $51 for June crude. Wheat. All right, so the wheat deal here is we had trying to do something. I wanted to establish some sort of position under $4. Wheat. I suppose I could do the same type of game, couldn't I? WAGAT, wheat on a quarterly, where are we at? We're back into the meaty area. Okay, that's a good sign. This goes back into the 70s. So wheat in relationship to the dollar is priced at the same amount it was priced in 1975. All right, so what does that tell you? It tells you we've obviously figured out how to make more in the bushel in yield, right? Probably. All right, so wheat down here. So I'm looking for, something. This is before it took off here. Secular cycle, first wave. And that was it. Wheat's not as, you'll get it, but wheat's not as much fun as soybeans in my eyes. That's why I watch the beans. Beans used to be the Rolls Royce of commodities before we got the S&P futures. And when I was playing it, it was $500 a point. All right, so wheat and dollar, maybe a rollover here. It's all going to be about the dollar here for the next couple of days. See how things pan out tonight. You have VIX at another extreme low. I did my little pithiness video, getting it all reset again. But the deal is, folks, you're at new highs. Why buy VIX, right? That's nobody wants it. I'll take it. They all want it. I don't want it. So wheat and the dollar is that way, and then just wheat out by itself here. Unbalanced volume is basically washed out on here. Better save that. Here's a weekly. You can see the trend has been pointing lower, but we are getting kind of a saucer bottom type deal here, and there's a washout. And then where am I at? The commitment of traders. Wheat was the first one. What do we have? All right, so we have a lot of shorts up here. And what do we have? Shorts are commercials. No, commercials were long. Excuse me, red. Commercials were long. You can see, we're back into that area. So it's, like I said, I wanted to get something under 4, but we can go under 3. So, it's one of those things that you're trying to accumulate something, you're trying to get it where your risk is less. If you have the money, the whole thing is you put in the minimum margin, you're going to get blown out of the water kind of thing. That's why we get the volatility, because people get whipped around on the, if you're only putting up, 5% or 10% on the dollar, what percentage, what's that, 0.5%? You already lost 10% of your margin, and that's why it causes those the whipsaw. All right, so we're The commercials here are actually, they're selling on the way up on wheat here. And the large specs are beginning to lighten their load from their short position. So you're basically trying to work on something for like, you know, Chicago wheat, you're playing, you know, May and July and, you know, September and December, you know. What do we have here for Kansas City? Okay, Kansas City poked up to, you know, back up to this range, and then, yeah, it's moved at extremes. Commercials are short. Right away, I mean, right out on the breakaway or breakout, they just go and whack it right away. It wasn't a smooth transition. It was like, quickly short this thing. You know, they gunned it, like here on the blow off, they gunned this thing, they ran into it. You know, and here all of a sudden it moves, what, 40 cents, and it's like short, you know. So I'd, you know, once again, I'd be defensive on this one here. This is Kansas City. Here's Minneapolis. Minneapolis said that they had a record again of, I think, volume around open interest. And look at that. That's in the short side. So it's basically the same type of pattern, but even worse. Watch for a running start here to take out the lows. I'll lean that way on Minneapolis here. You know, if it comes back through, then you have to take it on the long side, right? Right, just like on here, comes back through on the long side. What would be the next move? 6.5 or so for Minneapolis wheat. So it's like I said, be very defensive on anything can happen. You know, all of a sudden you know, somebody embargoes the United States, and then Mother Nature comes through and causes havoc, right? Remember the 79.80 Russian grain embargo? Prices took off screaming. Mother Nature was part of the narrative there, but also how to get the stuff. It had to be black market. All right. Yeah, short side on that, and back to Chicago. Yeah, so I have to watch Kansas City and Minneapolis wheat in relationship to Chicago. And remember, there's different wheats: winter wheat and spring wheat. Different varieties. These are all 3 different varieties here too. While I'm at it, I can look at corn. Bigger picture. So you can see, if you're only looking at a decade, you're missing all of this. You know, 250 corn. You know, if wheat's back into the meaty area from the 70s, why can't corn come back into the meaty area of the 90s, right? So same type of deal. Not much play is going on right here, though. You are getting the money guys to kind of poke into the long side of things. I'm sure they're looking at this type of deal. But if it comes back through, then we're headed, you know, back to 250. Beans we looked at. Meal. Ran into meal for a hedge. This may be a longer sideways. Look at the bigger picture. You know, so meal can run back down to 250 from 350. You know, then I'd be interested. And they're going to extremes here in a hurry. They're shorting this here too. Yeah. And oil, I think, was leading us down last week. Same thing. They gunned it in a hurry here. I think that producers are the shortest they've been in a long time in bean oil. So I think I wrote about down under 20 cents. Set alarms for under 20 cents on oil, bean oil here. Oats, usually the leader in all of this. It's somewhat thin. But you can see, you know, you get the run in 96, you get a drought deal, you know, and then we're coming back down. So we're you know, any type of washout on, I'm sure they're probably seeing this here. And we are poking our head through here. So we have to see how this plays out. There's our little reversal. Sideways pattern. Anything under $2.50 or so, you can stay focused. Stay focused. This is rice. I thought we had a bottom down in here. I guess we are kind of working on that. Big picture. Oh, it can roll over. 3/4 of the planet eats rice every day. All right, back to the charts. So wheat, same type of deal again, right? We're down in here. They made a run for it. It didn't hold, so possibility of, you know, a grander move lower here. I think it's quarterly, right? Yeah, we're down into the meaty area. Back in here's the 80s, here's the 70s, you know. So wheat is in that area, but I was hoping for something under 4, because it's the same thing, you know. It's can you swallow, you know, $2,500, you know, the contract's value is 420 times $5 is 21,000. So $21,000, and can you handle a $2,500, you know, 10% pullback? You know, well, you know, if you can hang on to it and get $1 or $2, you're making 25% and 50% kind of thing, and you can lighten, you know, leverage up kind of thing. You know, add. You know, just cut your contracts. You know, you add on the breakout, add on the breakout, add on the breakout. Because once it starts going vertical like this, it doesn't come and retest. There was a retest and it just took off running. But you have to be able to, you know, once it starts getting up here, it's, you know, things get a little more interesting in the money management department. Then your timing with options on here, you know, selling in the money options for the pullback. You go from 950 to, what is this, monthly? 2 months later, you go from July into harvest, September. So you go from, you know, 961 to 7, and then you're off to 13. So it goes up, you know, another 80%. So here you had to hold on to, like, we'll just say, you know, 7,500. No, it's more than that. 12,000 for the pullback to make the run for, what is that, $6, 30 grand. So you had to hold, you know, $12,000 pullback to get the 30 grand, right? So, you know, it's all, you know, it's all fun and games, you know, once it takes off here, things get a little more interesting. You know, that's why it's kind of like options. You know, you can go out on these things, and this was all over within a couple of years, right? I guess that's 07, so we're at 17. Where do we have, 99? Take another look here at the wheat. What do we have? 96, 97. I was like, where is 87, 88, 89? So 230, 240, so $2 higher. So that was basically it. Okay. So you can see how I want to kind of get it, you know, come back under 4, and then, you know, start thinking about how to work a strategy in here, writing naked puts to get long. You know, the thing's falling, the puts are going to be increasing, somebody's going to pay you to buy in, you know, that kind of deal. All right, so it's wheat, December futures, that's off the board. Like crude, we looked at Canadian dollar. Same type of deal with oil. I guess if oil does roll over, it looks like the Canadian dollar will go with it. But between 85 and 90, the Canadian dollar went higher. We had grains and stuff. We had a drought in 88, so that caused, you know, commodity prices to go higher. You know, will the Canadians be buying our, you know, Mexican avocados kind of thing? And, you know, substitution. There's not as many, what's 10% of, you know, population-wise for Canada, I think. United States, whatever, 15%, so 17, whatever. Yeah, no big deal on the Canadian dollar. I think the upper end, I think, is 85. And then the lower end is basically where we're at. Natty gas for May. Filled the gap-ish. Possibility of coming down here for May. 295. So like I said, anything under 3 or thereabouts for contracts, that's what we're going to be watching here. Yeah, kind of like a bear flag here and head lower. What do we have? A couple more hours, markets open up. March, yeah, possible sideways here. Sugar, another one of those diamond patterns here. Like I said, you know, on the weekly, I'll you know, I'll lean with it, but all of a sudden it's kind of like, well, you know, maybe this is a bounce here. You know, lots of volume up in here. So maybe, you know, this kind of took it out of it. We need to mark a little bit of time. Gasoline some more. These are sorted by volume. So corn, you know, bounced off the moving average. Set alarms all above this stuff here. Sugar again. Just like coffee, I think the same thing. A lot of these, you know, now things are getting a little more susceptible to timing, with seasonality, timing, the dollar, you know. Oh, what's this? Cocoa. Cocoa is just not, it's not happy at all. Looking for, I think it was a hammer or something, so be careful that it, just like with the orange juice, it reverses, not because it's bullish, it's just because it's too many bearish out there. Amendment of traders, what do we have? What do we have? What am I looking for? I'm looking for softs, cocoa, there it is, cocoa. Amendment of traders. Rolling on over, but it's at an area here, right? So they're probably, and we're beginning to cross. The commercials and that are beginning to cover their shorts, and they're covering their hedges here. They're willing to take 2,000 a ton for cocoa here. As you can see, cocoa's traded lower in the past. All right, so maybe a bounce here and then back down to about between 14 and 16, 14, 16, 18 area here. Probably just a little bounce. I just have a reversal here. Monday, possible 2,400. Whatever it takes to, but see, you can see it's not in an extreme anymore. You know, usually you see some sort of, all you're doing is you're beginning to cross. People are actually now getting short, you know, and then some are getting long. You know, here it is at 2, you know, they wrote it all the way down, and now they're, you know, they're beginning to cross over again here. So the round number deal. I wonder what the call options are. Yeah. Yeah, watch for a reversal on here. Yeah, watch for a reversal to come through, because it'll blast through the other end. If it comes through, what was this, daily? So it comes through, what's the high? 2121, comes back through 2121, it should blast through 2300. You know, because all these people who are, you know, finally went, oh, you know, bottom fishing, got caught, comes back through the other way, it'll blast through the other side. Yeah, here people were long, large specs were long, and they finally, you know, now the large specs are finally wanting to get short. Oh, for God's sakes, you guys, how can you do that? How am I able to, whatever. Crazy. Yeah, I talked about it coming through here. I did this here too, head and shoulders. Just didn't want to, not, whatever. Can you believe it? Yeah, right here, see, they crossed over here and it took off. Here we are again, crossed over again. You guys are killing me. All right, so that's cocoa here, cocoa. So watch for a reversal here. Pivot is 2117 or 20. No, what do we have here? This is 2017 S1, 1939 here, and then 2154. But what was that high? 2121. I said 2121 should do the trick, and then it should blast up into here. What's this? 2369. Oh, we should see if cocoa outperforms cocoa. Outperforms the S&P, right? Long cocoa, cocoa, C-O-C-O-A. Long cocoa, short SPX. One, you're weird. Yeah. Okay, so this chart is a weekly of long cocoa, short XPS. Sir, all I know is what I see is the ADX is pretty high. So maybe we have something here. Not much going on there. And that's going to be all your data, right? Yeah. So you need a daily long cocoa, short SPX. All right. So what I have here is just kind of a goofy thing here. Is the bodies are out of it. The ADX kind of is breaking down. On a weekly, though, it was buried. So I know it's all it was the 2300 got to, here's one. So that's the correlation is 1 for 1. It's just a goofy thing that came to me real quick. Here was a low, not much of a bounce. But ADX is here, and which tells me that it's in a persistent trend, but the daily is breaking down for fun and games. Yeah. Copy, save. People are going to think I'm weird. Long cocoa. Short SPX chart. Okay, cocoa, natty gas. All right, deferreds. Here's October. Okay, so natty gas. This one filled the gap and then some. All right, so here's pivot. What do we have here? 341.2. Then what's this down here? Yeah, towards $3 here on October. I want to get my fingers involved here. Moving average. We'll see. Markets are going to open up in a couple hours. We'll see if we get some. If they begin to talk about the seasonal washout here. But like I said, here's your moving average. It's pointing up. So you're looking, you're on my side. It's long. I'm not going to play the short side. I'm not going to, play mumbly peg with, 17-year low. I'm looking for, I'd rather play the, $12 higher versus $2 lower, that kind of thing. Brent, corn again, July. Where are we at? February. Okay. I'll have to keep an eye on this here. June, you can see gap fill came down. It's basically, it's going to be stuck in these 2-day bars is basically the range, and then move it out to like here and then here kind of thing for the range. We're in the upper. This is a little diamond pattern. It's distributive, but it's also since we are, kind of above the breakout area here, you have to watch that if whatever happens, natty gas field workers go on strike, whatever, but however you want to make it, for narrative, I don't care. All I know is it's pointing upward and it's coming off of a major low. Wheat, that looks rolling over. Looks like our sellers are coming in there. Here's heating oil. June's breaking a moving average here. The next one's down to here. It's at a dime, so heating oil a dime lower. Cocoa, gasoline, same thing. Light oil, beans, same thing. We've talked about these. Heating oil, corn. That one's holding on here, December 17. Well, I suppose this would be the beginning of the new crop here for, if you want to take delivery and hold it for the drought of 1819, what I'm looking for. So that would probably be why it's holding there. Because if you're going to corner the market, you want to be gobbling up this stuff. All right, so I need to watch that. Gasoline still lower. Natty gas febs off the board. How did that go off? Held the moving average basically, and the cloud, and the pivot. September oil, that looks lower. Cotton now. Cotton commitment of traders. Cotton. All right, lots of bodies there. They're in it, huh? And the commercials are heavily short. All right, have to take a defensive tone on cotton here. You know, after walking all this way up, I talked about, well, you know, you better watch it. It's like, yeah, there you go. You guys suckered me in too. Like I said, this is what happens when you don't put stops on and you have billions of dollars worth of other people's money to implode, light on fire, whatever. Yeah, look at this. Here's the green line, large specs. They're just long this thing, something fierce. Cotton, anything down in here would be awesome. 40 cents. Cotton cut in half. You know, oil comes off. Cotton's a substitute. You know, lycra, whatever. You know what I'm saying? For clothing, but most of that stuff is, and then you burn it up. Cotton is cotton. 2008. That's a recession, drought, bottom. 2005 or 1985. So that's a year prior to the bumper crop or to the drought. Okay, keep an eye on stuff here. And the commitment traders, they're at extremes here. Cotton is susceptible to a massive washout. All right, so pivot here, 73, 79, 70, 73, 80, 72. 72 is washed out, then expect it to be a lot lower. That's kind of how I look at it. But it is just, they're just walking this thing up. Now the angle of ascent is picking up a little bit more here. So what do we have? It's pausing under here. R1, 76.40 and 78 even. For if they try and swing this thing through. See how they made it 1-2 bars, basically banged into, what is that, R1, and came off, went from 78 to 65. 23 cents, 13 cents, 13 cents. Yeah, watch cotton for major failure. Sugar again. Look at sugar, softs, sugar. Well, they are lightening their load a little bit on here. Kind of be a bullish sign here if it holds up in here. Oh, well, I suppose you could do the old head shoulder thing, but it's a little severe in my case here. 10, 12 cents. Yeah, C wave down to here. We don't have the 70s on here. Oh, man. Well, we saw that before in last week's video, so I think I said, you know, you might have to hold on to sugar if it's a C wave, you know, AB and a C wave down into here, you know, below 17. So be careful, but this is a pretty good sign that they're unwinding their positions here. While I'm at it, coffee. Extremes. They're unwinding. Yeah, keep an eye on coffee, but it's, you know, it can move lower. You know, there was a drought in North America in the following year. They got it to run in South America here in coffee. 92 didn't pan out, but 94 did. 6. What's this one? 0. 4 again. What did we say? 6, 7. So here's 7 in coffee. Yeah, like I said, coffee's, you know, it's quick to move here. You know, no messing around. They had to have Superman coming in. What was it, 1985? Superman 3 with, I think it was with Richard Pryor. Yeah, look at that pattern. Keep an eye on coffee here, but you're going to need some deep pockets, okay, because this thing can move. Suppose look at options. I started putting futures charts down in my little goofball account. So or futures positions just to watch. You know, I'm a one-man band here of talent and engineer and research and all that fun stuff. So I need, you know, instead of stopping and writing everything down, I just put it on a simulated account and it gives me a reference point. All right, that's sugar we looked at, cocoa we looked at, and the OJ should be thin. We're coming off, but we got the bounce at 160. I'm looking for 180. That was 20 cents. But like I said, don't put it past these guys. Somebody can get short. It's like we saw with cotton. If somebody's short in this OJ, like right here, this kind of pattern. Makes a high, comes down, takes out the low, and all of a sudden it pokes through here. Well, now we're up to 220. So, you know, I don't know how many of you took advantage of the lottery ticket down here. But it's basically time is not going to be your friend on here. So, but you never know with thin markets and stuff. Basically, it was, you know, Monday, right? So this is our lottery ticket here. Up to here, I'm looking for 180, but maybe we can stretch it a little bit more. I guess I have to look at a Fibonacci to see with a third back, half back kind of thing. Bodies are getting out, so it'll be interesting. It always is, right? Platinum. Sugar July. Platinum to kind of go along with, you know, finally we got the $100 move in platinum, and only took a little while. With the $100 move in platinum, platinum's little, you know, what did I write? Long platinum, short, you know, palladium kind of thing. We'll see with gold. You know, these are white metals, platinum, auto, and things of that nature. Maybe an inverted head and shoulders, possibly on here. What do we have? Maybe another 100 higher up into here. Maybe 80 to 100 higher. We shall see. Commitment of traders, gold, silver, copper, platinum. Once working on that sideways action here. Sideways. What do we got? Yep, ABC pattern. Wow, up to 1400. So similar to like gold. While we're at it, look at palladium. Wonder if we got a head and shoulders thing here. Sure. Yeah, I kind of just pass on that kind of thing. Did we look at copper? Did we look at copper? Yeah, that's right. They ran into it right away in a hedge. Oh, what's that kind of pattern playing out too again? Quick run up after a long sideways. Pause. Oh, that's a secondary breakout. Oh, you buggers! 2006 though. That was the housing and stuff. 320, right? This is in the past. All right, copper. Copper quarterly. Go. Yeah, you can see all the way back to the 70s. Okay, this may be, all right, so here's the 70s with copper, right? 50, 60 cents, okay. Then we get a new range and the bull market in 1980. We go back through the 80s and we have, this is the bull market, or this is the housing market. So obviously the last leg of the housing market that I'm running into, so after 2020, we'll probably want to get long something fierce on copper. And then all through here, through the 90s and that all the way back down to here, another bull market straight into the housing. Unwind, back up. You know, maybe this is, I'd like to see that's where I'm leaning. I'm like, well, you know, you're back to this. And it's the dollar. Let's do it that way too. Copper divided by the frickin' US dollar. Okay, so we did come down off of there to here again, so I'm not the only one. All right, so we bounced. We got a little bit of a move here. Dollar gets stronger. Copper's probably gonna have some issues here. But if the dollar comes off and rolls through, watch for reversals. They poke on through and reverse through here. What am I looking for? Weekly. So here's the dollar, or this copper divided by the dollar. So swing. What's this? The 15 levels. All right. So possible inverted head and shoulders here. My thing was, this was going on, but since I didn't trade it, wasn't too vocal about when it broke out. I had the gut twitch here and didn't let go. Now I have to realize, what I'm doing here, right? Giving a non-biased opinion. All right, so I'm looking for copper prices back into 2015. Is that saved? I think that's saved. All right, so copper into 2015. All right, where are we at? 15 levels. So 295. Where are you here? R1, 286. Okay. Now, money flow. Where are you? Money flow. These are crossed over. This is what do we have here? Average trading range and Bollinger Band with this move right that drove it. I'm looking for the money. One more swing higher, maybe $3 puts. Keep an eye on this stuff here. We have 280 puts, 290 puts. The money's in it, or the unbalanced volume's in it. I'm just trying to, basically I'm looking for some sort of reversal. If it goes, it's in a channel here. It pokes its head through and comes back. That's what I'm looking for. All right. Copper. Okay. Coffee, here we are. All right, so coffee. Next swing would be 162, and this is March. Larger sideways pattern here, but like I said, have to keep an eye on things. Well, volume did kind of wane a little bit on the pullback. And on this, treat this as a flag for right now. Like I said, keep some deep pockets on here. That looks like a reversal bar. June 18. Oil at 56. Natty gas, December 16, came right into the cloud. Soybeans, November 17. Oh. All right, we discussed the shorting up in here. All right, so now we're back at it again. That's what we're doing. We're watching for November 17 here. That's kind of flaggish. Oh. The bodies did roll into this thing, though, with the volume. All right, we shall see, won't we? Yeah, we shall see here. Natty gas, July. $3, 315, 320. It's down here, 318, 320. So July, if we do get the drought this year instead of the winter first and then the drought, we'll have to watch July's contract here and the pullback. If there is one, of course, we would never know if it takes off this way. 365 and 380 for July. Pivot 341, 325, and 302, 303, we'll say. Wheat for July didn't bounce off. Oh, that was corn, the moving average. Alarms up in here, R1, bounced off R1. Now we're at pivot. July wheat 415 and 485. That's what it is, right? That's out it. We're at pivot. You're either going to see this one or this one. Pretty much. or it'll just continue to narrow and trade between R1 and S1. It's like it has for the last quarter or so. Gasoline again, roll over, sugar. Sugar. October 17. I just got out there. Back to here. Well, sugar will be interesting. They're all, it's all the deferreds are holding up here. We all know that it's whatever it's on it. It's sooner than later here. That looks like a secondary distribution lower. Brent crude for November, like crude August, same type of deal. So Mother Nature comes through, which basically is the commodity prices take off. The Fed has to raise interest rates no matter what to kind of slow that down, the speculation. That's what we're doing. We're driving food prices so high that people stop eating. Cute, huh? Laws of substitution. They're pushing pork something fierce at the store right now. Whole bags of loins. Wow, I guess we do have the hams that need to be smoked and stuff here for the next quarter. Natty gas for March. Corn, SEP, paused right on the moving average here. I have to treat this as a pause. Yeah, they're not gonna. We're running out of time here for some sort of washout. They're definitely eager to get into this stuff. I'm not the only one that knows about cycles. Copper prices did poke through and come back here. Is that May? All right. Gasoline. Heating oil. That's lower. August natty. Much better, much nicer close here. The white held the. What's that? It's just no. This is 20 period. This is the Bollinger Bands here. I think right here too, right? Moving average 40. So there's a 40-day moving average here. Same color as the 20-day Bollinger Bands. Poked on through, came back in. Poked on through, we're back. So we're gonna. Like I said, we're kind of doing that range thing for right now. Oh, those things would just like roll over. That's the greed talking. There's cotton. Have to keep an eye on that, right? May, if it fails, comes through. Any gas for SEP. 320. So we're talking next year, 320 here. Subtle arms down there. Well, we shall see, right? We're trying to get in a little bit of a riskless type deal. That one's flagging out, but it's sideways here. A lot of contracts, definitely same underline, but what a month or two will make, huh? Heating oil. Natty gas for November, 350. We're talking 3 1/4 last time, right? For the options type of stuff, 325. All right, 3. Yes, this is November. Any weakness down in here you want to gobble up, kind of thing. If it breaks out, we're off and running. What did I have? Did I look at Natty gas to go along with? What did I get? No, there's Natty right there. At the bodies, did we look at the bodies? Oh, that's right, they're beginning to roll out of it. That's right, it was the funds that were long and natty. Commercials aren't that short, but the next swing higher they probably would be. Yeah, this is definitely going to be interesting here. Series of higher highs with no pausing here. Ooh, can't wait for the markets to open up. And I have to be quick on this one here too. Just, have your, put an order down here for whatever, for May or something, you know what I'm saying? You know, if there's a hard unwind, they're going to want to gobble these here. You know, at best before we're talking that you're in a multi-year sideways market. You know, I guess I go back 20 years. And you can see that just from here, sideways market, same type of deal, sideways market. Then $10, $12, $16, $14, 6.5, 4. You know, so it's like, okay. Cocoa. That's right. Remember, comes through here, it'll blast to the other side. 23.25. Palladium. That looks like a good reversal here. Yeah, see, this is what I'm looking for. It comes through, it pokes through for breakout, can't hold it, slides right through. So that's palladium. Heating oil. Okay, heating oil. Gasoline. Run through these fast. September wheat. 4.5. Maybe an inverted head and shoulders here. You know, you never know what's going to happen here with the, you know, we had a grain embargo in Russia and people go, okay, that means we're going to have more grain here again. Prices took off. So logic, just look at the chart. Logic, it's, you know, skip the logic. Leave the logic up to Kevin. With his little road to Dushanbe. Heating oil, right? Yeah, looks like secondary selling. July, like I said, comes through, fails, and all of a sudden, boom, you're down to 73. You know, cotton's almost to 80, and then before you know it, it's at 73. So be careful. December 17. What are you? 342. I'd be right under. Yeah, so that's what I'd put. You know, this is December of 17, right? So, you know, you put like a buy order down in here. What's this? 340. You know, set an alarm up here. What's this? 348, 347, set an alarm, beep. Okay, then you go and look, because what happens if you take this out, you're going to collect stops, and here's S1. Of course, you're going to have to stomach it down here, but you want to buy more. You know what I'm saying? It's my plan, Stan. Copper. That just looks like a reversal here, July. Cocoa. Gasoline. Wheat. 460, 465, 470. All of these. Silver held, right? May held. Went higher here and kind of doing the flag thing for right now. Held pivot. These would be your next targets. 1681 and 1736. Oh, what am I looking at here? Oh, pivots. Yeah. Oh, excuse me. 1678. 1678. 1755 and 1819. You know, like I said, I'm when it goes under $8 again, then I'll, you know, start gobbling up the bars again. Everything goes in cycles. Coffee, July, beans for August. That's a little bit of a deeper bull flag. Plus, it's triggered here, so we'll see if things begin to wash out here. Wow. Very interesting. And here's D's cotton. It's at 72, so you can see, and it's sideways. Gold. Yeah, gasoline looks like it's going to come through. Heating oil already has. Coffee. Maybe find support area here, 55, 155 for September coffee. Off the moving average there. FU beans. What are you? September 17. Lots of bodies up in here. It's going the wrong way. Oh boy. That does look like a reversal. Little dots do the trick. February. September silver versus silver beans. Here. Went off the board. Went off the board at S1. All right, so shorts got popped last 2 days. Gasoline, Canadian dollar, corn, 16, it's expired, March of 18. March of 18's holding 4, huh? It's kind of like producers, you know, do you want to start hedging some stuff for next year? Lumber ran into the cloud here. So lumber kind of went up over the whole taking away the mortgage interest deduction kind of thing, or mortgage interest, giving them a credit, folks credits. I get what's first time home buyer, somebody hasn't purchased a home in 3 years. Our economy is homes. Autos are 25% of GDP. This is one messed up chart, July of 18, 55. Wow. Cocoa, reversing. Wow. That's right, thin contracts, Kev. March 18 week, $5. Maybe an inverted head and shoulders here. You guys are killing me. That's the market, Kev. The market's right. Oh, right there. 255 for April copper. Come on. Sell that stuff off. Silver, silver, copper, copper. What are you? Oh, November. June. Corn. May 18. $4. Under $4. I'll have to watch you. All right. That's the thing about the futures. October 17. 1270 on a daily, ABC kind of thing. I know on the weekly I said 15 something, but you have to start off the daily, you know. How do you know you don't have another one of these in stored? That's Italy. July. Coming to the end here, folks. Just wanted to run through them. Cotton, that one's off the board. That one's goofy. Goofy, goofy, goofy. Coffee. Lumber. Feb silver. What kind of goofiness is that? Platinum, Jan 17. That one's already gone. Off the board. Copper. Come on, a couple more. Very long video, Kev. Yeah, but you ran through them all. Kind of got an idea for those folks that might be interested in doing some trading later on in the year. Well, some of you have scared money, and some of you need money, and some of you, January. D16 wheat, S&P again for September. So here's September. What do we have? 2140. Up in here, 23 and 2330 for September. All right. Looks like it's going to flag retest. So what's September here? All right, because the deal is eventually here, this stuff will roll off, right? We'll get out of March and move into June. But you can start setting up alarms for September. What happens if it comes down to here? Is this a place to buy, for another swing higher, that kind of thing. Your resistance levels, and this is for the whole month. So 2326, 2303, 2266, 2243, 2207. What's this? The moving average. 22. Stuff has to hold here. Pivot has to hold on your September. All right, because if it's lost, then it's, all of a sudden you're below here. This was the first target, right? For if we begin to lose some of these here, the target would be the low for the election night, September. Pretty crazy, huh? Actually had some volume on September there. Whopping 12 on the volume though. All right, coffee. Next, that was kind of scary. Palladium, giant silver, cocoa. December 17, breakout, roll over. Wow, 2250, 550. No, what am I looking for here? Where's the pivots? 2266, right? Is that about that? 2266, 2266. Watch your December here. I'll start putting alerts on here too. What's this here? S2. 2223. All right, that would probably open up the floodgate. They bought the breakout here. And whopping 1 in the volume. Oh boy. What's this volume over here? Are you kidding me? What does it say? 120, 130 contracts. It's like I said, eventually this stuff will come current, come to the front month. So you might as well start paying attention on this here. All right. And CAD dollar cotton. These are bad. Last page. Dollar index for June. What do we have going on here? Halfway back, 101.5, and then come down. That would be interesting. If this is now overhead resistance, the moving average, and pivot, bounce up, and the dollar, pokes its head, use the upper end of the cloud as resistance for now. Coming to traders, I think we did look at the dollar, didn't we? Didn't we, Kev? Did we not? The bodies are in here too, right? Yeah, they're getting there. This is under Clinton, raising rates to cause the stock market to crater. I think we started raising in 94. And then we stopped around in here, and then the market's angle of ascent increased immensely. And the dollar continued on as we rolled into recession, and then 9/11, and it was just like a Zowie Batman. And then we got down to, it was 08. So the dollar's been basically going upwards for a decade, 9 years, which means this is 8 years. Wow, could this be it? Well, hey, how much value can you put in the dollar, right? Previous peak here. Just ask the British, right? It takes $4 to buy 1 pound, and now it takes $1.25. This may be it. That would be interesting if we went to 90. It's all going to be interesting. Should be a great year. Should be a great year. Just hang on, folks. Ooh, and about that is resistance. Yeah, lower interest rates, the dollar would come down, right? Right. That was it. That was the dollar. Yeah, dollar contracts. What is this one? March. Yeah. So, like I said, in an ideal world, the dollar would come down, come below 99. Bonds and stuff would take off, and interest rates would come down. We could sell some homes. Like I said, I'm looking for an end game. You saw that on the commitment of traders. This is, I've been stomping my feet for a while. Now we're making another swing. You have your bottom action, sideways accumulation pattern. You get you put in 30-year bonds, priced in for the next, real estate cycle peak in 2042 after 2024. And here get a secondary move, and then we begin to, everyone's talking about raising interest rates, and they swing into it, and they're bloated in the dollar, and they're thinking they're just ripe to get caught. So you run up to about 10, say 102 is, it's kind of like I'd like to see sub 99 before I saw 103. No, we shall see, won't we? All right, I'm going to let you go with this one. Sorry, it's long and not everything was covered, but I'll break that out into the new rundown of the futures rundown kind of stuff. And then there you have it. Have yourself a wonderful afternoon and take care. Bye.